Hey traders, welcome to Charts and Coffee. Hope everyone is doing great. All right. Happy Friday, everybody. Good morning, Ann. How are you? All right. Good morning. Good morning. Hey there, Debbie. All right. So remember, we have a 3-day weekend coming up. So Monday markets are, stock markets are closed, and we've got a shortened week, and we've got this long weekend where if traders are making decisions about whether or not they want to take a position over the long weekend, Fridays into a 3-day weekend can be pretty tricky. So keep that in mind. And then if that isn't enough, we know we have options expiration. And in this options expiration weekend, 3-day weekend, we also have a slightly more hawkish Federal Reserve. And that means that as we are adjusting to 1 to 2 more quarter point hikes, the equity markets are obviously not going to love this. Bond yields are going to go higher, sending the ZB futures contract, sending TLT lower. We're going to have a stronger dollar for a little while, possibly setting up a euro buy. And if you checked out the free video from last night, I talked about not things that have anything to do with the intraday. We had a little, you want to call it a meltdown or whatever into the last hour. So be it, right? It's so easy to look at a 5-minute time frame, a 2-minute time frame, whatever, and look at a move and lose sort of the scale for the move. And one of the big adjustments we continue to make into 2023 is that living and trading and suffering sometimes through that short-term 2-minute, 5-minute in 2023 can be quite nausea-inducing, as we saw into the close. But when I step back, and this is exactly what the free video was about, when I step back and look at, for example, here, the daily and the 1 hour, in terms of the move, the overall movement lower has a lot more context. Yeah. The 1 hour is still easily above the 200 propulsion. The daily time frame is still easily above the 200 propulsion. Why does that matter? Being above it is generally bullish. We still have, as you can see here, we didn't even take out, this week's lows on the movement lower. So it's really easy to take a sell-off, a dramatic one, albeit a dramatic one out of context. But when you step back, look at the 1 hour, look at the daily, you know what my brain says? My brain says that wasn't enough of a sell-off to trigger a buy. That wasn't enough weakness to give us that nice blue light special. So those are things that, when we have a different perspective, and the easiest way to get a different perspective is change the time frame you're looking at. All right. Okay. By the way, you will see here on the right side, we have a webinar coming up. It'd be nice if I gave you all the link for the, what did I just do here? Oh, there we go. Be nice if I gave you all the link for the sign up, huh? All right, let me do that here real quick. And we're going to be doing this on Thursday. Super, super stoked about this. Let me move this clock out of the way. Yeah, we're going to be doing this on Thursday. It's going to be here before I know it. Super excited about that. And the cool thing about this is a lot of what I'm talking about right now, this idea of changing time frames, that's a big part of what we're going to be talking about. How am I using time frames to my advantage to find where the clarity is in this market as we go into really March is going to be here around the corner. Unbelievable. All right, so let's get into the questions as always. And let's see. Hey there, Debbie. No, I probably sound worse than I feel at this point. No, I appreciate that. Appreciate that. Thank you. Thank you. All right. So let's go ahead and dive into the questions. And first up is Kevin, who asks about DHI. Yeah, Kevin, we did a deep dive into uh, ITB and XHB yesterday in the mastery, in that our focus is that focus is that uptrend that we can see in increasingly more of the broader averages, more of the individual sectors. Here, let me show you what I mean. The idea that a sell-off like yesterday should change our mind about being bullish is kind of hilarious. It does matter where we look. What are some of the really strong corners of the market? Semiconductors in fuego. Financials actually look pretty darn good. This is XHB, where DHI is the number one weighted stock. This thing's looking pretty darn green. So when we see a green, and this is what I was alluding to earlier. So yeah, I love the idea of getting long on the pullback. And I would look at a pullback through the prism of this chart right here, and that's the one with our wave and grab here. And you could see we're right near the 200 propulsion. That's an aggressive mean reversion. We're not too far from the wave. That's my preferred mean reversion. So those are things that we can definitely look for a buy. But remember when I said earlier that, gosh, we saw the sell off yesterday, and I thought that's just not enough. If you're going to sell off market, really give me that blue light special, really give me that mean reversion, and then at least it's useful. And so while I'm not going to get caught up in that on a 5-minute chart, because I'm not going to trade actively the last hour of the day, it's not even one of my preferred windows for day trading. So just by virtue of not viewing that 3 to 4 p.m. Eastern window as a high probability window, we avoid that just for no other reason than it's not a time of day that we focus on. But in terms of the hour, in terms of the daily, yeah, when the sell-off started, I thought, come on down to about 151. Why stop it? Why stop at 152? Come on down. Give me that blue light special. That's what I was thinking. And DHI, same thing, Kevin. All right. And how cool would it be when everyone else is thinking, oh my gosh, it's a sell-off, the market's crashing, market's getting smashed, whatever. You're still able to stay in opportunistic mode. And that's something that I want to always have as a gear to shift in. I never want to succumb to the broader market panic and disappointment and whatever else. We want to ask ourselves, how do we use this, right? How do we use this to our advantage? Hey there, Ian. Do I have a deep dive video on how target rate probabilities affect the market, or can you point me in the direction to learn more? Ian, in many of the free videos back at the Simpler Trading YouTube channel, I've dove into that topic. We do it on the regular in the Sector Secrets Mastery Room, as well as Simpler Futures. But in general, is there a deep, it actually doesn't require a deep dive, and it's really, really simple. The target rate probabilities are the absolute easiest way to decode macro. I see a lot of folks, talking about macro and expounding on their macro prowess. I'm never going to do that. You don't need to be a macro expert to be a trader. I think it's one of those topics that a lot of traders love, or analysts love, because it makes them sound smart. Truth of the matter is, let the target rate probabilities do all the heavy lifting, because at the end of the day, the only reason we care what it is that Meester, Powell, Williams, Barkin, yesterday we saw how a non-voting member, I believe Bullard, could send panic through the marketplace by basically stating something that's already on the target rate probability, which is, yeah, we're really likely to see 5.25 to 5.5. So yes, while the broader averages are likely to sell off with something like this, you say to yourself, yeah, welcome to the real world. We know we had to at some point accept this as a reality. Now let's get back to work. That's it. I'm just looking at which column is tallest and what we're expecting. It doesn't require anything more than that. revisit these after jobs numbers, inflation numbers, growth numbers, and you'll be just fine. It's the easiest way to decode what's really happening, where the rubber meets the road in terms of macro. All right. Cott asked, do I still like Apple? Oh, yeah, absolutely. Look, yesterday's movement lower, granted, we sold off into the close. I get that. And selling off into the close does put a certain amount of panic, right, in the hearts and minds of traders and investors. But if we were to step back 1 hour daily and just look at what we have, the 1 hour is oversold. That's it in a neutral environment. The daily is still in an uptrend. So did anything really change on something other than a very short-term time frame? No. And that's why, yeah, absolutely. Take a look at the DPMRs. Take a look at the market structure. This looks still very much like something I want to be a buyer in. Just here's the important part. The important part is waiting for price to get into the zone, right? Or the way I like to use it is baseball parlance. Let's wait for the pitch in the zone over the plate that we like, right? Not that other people like, that we know is best for us. RS asks, are the HPMR and DPMR and the lower studies trend sector slow part of a package to buy? RS, actually, and you'll learn more about this on Thursday. These are tools that I've used for a really, really long time. And in different classes, we make them available. And yes, let's see, HPMRs are separate from DPMRs. One's more of an intraday tool. One's more of a short-term swing tool. We're going to be talking about short-term swings because that's how we've been really navigating 2023. So DPMRs and the lower studies trend, the multi-trend and the sector slow stow are going to be part of the class that I have coming up. So I always like to let everyone know, rather than having to go out and buy the indicators a la carte, when a class comes around, I will tell you this, Trish stacks the class up with so much good stuff. It's about the best deals that I have every year, where you get a class with me, depending on how much you want to spend in terms of time and commitment. You have live trading with me, and we always include just a ridiculous toolkit that is curated to make the analysis and the setups that we teach in the class work better. So yeah, the simple answer is yeah, it's the one coming up. So if you haven't already, go ahead and register at simplertrading.com/auto. Thanks for the question, RS. All right. Next up is Alex. How are you? Yesterday's 1% pre-market ES drop had me psychologically avoiding day trading the rest of the day. I feel I missed a move and may wait for the next day. Is that wise or too cautious? Alex, I'll tell you what, I trade what I see. We did that yesterday. We had 5 day trades yesterday in the mastery and the futures room, and we went 3 for 5, right? 100% win rate, only in my dreams, and only in anyone's dreams, right? That's not even what we're shooting for. We're just shooting for a high probability of wins and an intelligent risk reward. That's what keeps an account moving nice and from the lower left side to the upper right side, in our P&L curve. In terms of waiting, all I would say is run your sequences, run your numbers, right? Our lives are sequences and numbers. What is a sequence? Is there risk appetite or risk aversion? What is the euro and what is the bond market doing? Is risk appetite synced up with what we're seeing in equities? Are we seeing these things move in harmony? And then we look for setups. So if you see the harmony and then you see the setups, I would say, do it, right? That's what I focus on. Yeah, for sure. All right, next up. Hey there, Jack. Is this a normal reversion to the mean, or is this a reaction to a change in monetary policy voiced by an FOMC speaker yesterday? I don't even think we have a reversion to the mean on those longer term timeframes, Jack. We didn't even have that much of a move. Really, we didn't even have yesterday's move, the move on the 16th, right? that didn't even take out. See, this is so funny to me. People say, oh my, I look at the comments on my free videos, and not that anything's right or wrong, uh, but we didn't even take out Wednesday's low. We didn't even take out a low in the week. So it wasn't even enough to do something like that on a longer term, say 1 hour or daily. But to the second part of your question, uh, was this a change? Actually, no, this was, I would say, based on the Fed fund futures that we looked at together already, this was actually reiterating, confirming, accepting the reality that while there is a growing possibility of that higher rate hike, that terminal rate hike peak at 5.25 to 5.5 basis points, which means 5.25 to 5.5%, or I should say, when you hear basis points and people say 500 basis points, put a decimal right after the 5, that's 5%. Yeah. So 5.25 to 5.5, or 525 to 550 basis points is one more quarter point higher hike than we were expecting even 2 weeks ago. Equities aren't going to like it. Bond yields are going to go up. Dollar's going to strengthen while we adjust to this new reality. But Joker, I agree with you. There's nothing on my charts when I trade what I see, not what I think, not what I feel, as if my colon is the one, as if my gut's making decisions, right? I'm with you, right? I'm absolutely still bullish. There's nothing here that's upended the trend when it comes to the multi-trend and the green grab candles. So absolutely. I think Joker, yes, I think you're kind of on the same wavelength where we're with me, which I love, that we're not panicking, right? Look, I'll tell you this. Anytime anyone wants to come around and talk about, you know, panic and the end of this and Armageddon and whatever else, right? People who sell panic, isn't that funny? Also tend to like to sell you the cure. There's no panic here, just price action. And I will never, ever, ever say it's time to panic. And because there isn't, right? If we need to start getting bearish, we'll get bearish. We'll start to work the resistance of the HPMRs, the DPMRs, the slow stow, the V score, right? And if we can stay bullish, we'll wait for the support of the DPMRs, the HPMRs, the V score, and the slow stow. I'll always go back to my classic, to my timeless tools. Gang, what's timeless? Timeless is stuff that doesn't change with the fashion, with the trend, with whatever, whim is going on, right? We stay true to the things we know that continue to work. I think that's super important. I love that you all here are thinking opportunistically. You know what a rare thing that is, by the way? The attitude that you all have to think, hey, where's the opportunity? Not succumbing to the panic. Yeah, it's fantastic to watch the community just say, all right, where's the next opportunity? Yeah. All right. Could we have used the DPMR to see that we are approaching the top of the range prior to yesterday's drop for the SPY? So is there any kind of, now I don't go into predictive, right? So David, again, we're stuck in a range. So I'm going to go back to, is there any way the DPMR would have said we were going to sell off? No, I would say no. We're in an uptrend. This is range bound action, David. If you look at the SPY, this is range bound on the daily. Now, what about anything else? It's range bound on the 1 hour. It's just, we're stuck in a range. What got everyone's attention, I think, yesterday, and understandably, for sure. Remember, gang, it's not where we went yesterday. It wasn't actually where we went. It's the speed at which the market did what it did, right? So we've heard it. I've heard it a lot when I used to be riding motorcycles more. Speed kills. It's true. Speed is what freaked everybody out yesterday, not where we went. Where we went really isn't anywhere new. So I think the best way to put all this into perspective is one of two things. Have a way to measure volatility and look at a longer term time frame. Because when you do both those things, you realize, oh, there's nothing really here. If you're going to sell off market, really sell off and give us something to do. All right. So I love the questions, gang. Thoughts on DIA for a short based on the D chart, on the daily chart. Oh, okay. I'm always going to set things up on the YM when we're talking about the diamonds, the DIA. And on the daily chart, is there anything on the Dow for a short? On the daily? No. The last time, this kind of goes back to David's question to Robert. David's question about, did the DPMRs give us any insight into weakness? Well, remember, the SPY and the ES are in uptrends. The Dow is not. So kind of going back to David's question and sort of mixing it with yours here, Robert, which they complement each other very well. Look at the 14th. The 14th is what the DPMR does when it tells us, yeah, there's a pretty good chance there's resistance. Even arguably the 13th. We can say the same thing on the 7th. We can say the same thing on the 1st. If you look at the daily time frame, on the 1st of February, even 7th of February, 9th of February, 13th, 14th, those specific candles did lead to lower lows shortly after. That's what we're looking for. So right now, no, my friend, right? And David, do you see, kind of going back to your question, I know this is not SPY, but it's YM, which would map to an index as SPY would. The Dow did exactly what you're talking about. The DPMR said, hey, yeah, we hit the ceiling. This is a little toppy. Don't be buying up here. Don't be buying momentum. Don't get suckered into long positions in that yellow zone. That yellow zone is resistance. Do you have to open an account? That's simpler for the webinar. Jack, absolutely not. It is a free webinar. And by the way, Jack, so free webinars are designed to do what? I'm going to walk through things that have been working for me, not just the last 2 or 3 months, but the last, well, my career. What aspects of what have I done throughout my career? Which aspects of those are working specifically really well right now? You know, if you're a pitcher at the mound and you know the batter can't hit a curve, right? You're going to throw curves, right? You have a lot of pitches you could throw, but you're going to throw curves because you know that's the way you're going to strike that batter out. I think us as traders sometimes have to adopt that mindset of, hey, there's a lot of pitches in my repertoire. There's a lot of things I could hurl at the plate, but what's going to get me what I need? And that's for us, you know, different trades. So I think those adjustments are really important, and we make those webinars free. And Jack, in the webinar, I am going to tell you what I'm doing, what tools I'm doing it with, and then I'm going to make you an offer to join me for a class in March. So just so you know, that's the way that we operate with these webinars, and it will well be worth your time. We do not make it a pitch fest. I'm going to talk about trades, show you all examples, and we're going to walk through timeless tools when used in the right sequence are working right now. All right. So, gang, I've run over, haven't I? Yeah, the bot saying, all right, Rog, I lost track of time. Thanks for the questions, gang. Great questions. I will see you all next week. All right. Thank you as always for being a part of the community. Oh, actually, no, I'll see you Sunday. I'll see you Sunday for the Raghee report. So check back at the Simpler Trading YouTube channel or my YouTube channel, 6 p.m. Sunday. I will see you all for the Raghee report. And we'll talk about how this week ended going into that shortened week next week. Also, register for Thursday's webinar, simplertrading.com auto. All right, gang, be good to each other. I will talk with you soon.